All right, welcome everyone. Today we are going full-on detective mode. We've got a real-world technical analysis report for a stock, AVGO, and honestly, it's a real head-scratcher. It tells a pretty confusing story, so our job today is to decode this thing piece by piece and figure out what the heck the data is actually trying to tell us. So yeah, let's dive right in. Okay, so right out of the gate, the report drops its final conclusion on us. The big recommendation? It's not buy, it's not sell, it's hold. Basically, a neutral stance. It's kind of saying, hey, if you own the stock, maybe just hang on to it. If you don't, maybe just wait. It's pretty much the financial equivalent of a shrug. But come on, if it were that simple, we wouldn't be here. The real mystery is why the report is playing it so safe. And then you see this little gem right below the signal. Confidence level low. Okay, now that changes everything, doesn't it? The report is basically whispering, so our best guess is to do nothing, but we're really not sure about that either. This little phrase is our first major clue. It tells us there's a serious conflict, a real battle happening inside the data. So why so uncertain? Well, to figure that out, we have to look at the evidence. And here it is. This slide just lays the whole problem out for us. You've got 3 different technical signals all screaming sell. And then standing all by itself, you've got one lonely signal saying buy. Now, if you're just counting votes, this looks like a slam dunk, right? A 3-to-1 majority? That's usually a landslide. So why on earth did this lead to a cautious hold with low confidence? That's the puzzle we've got to solve. So let's get right into the thick of it. This massive tug-of-war happening between the indicators. To solve this mystery, we can't just count the votes. No, we have to actually listen to what each side is saying and understand the story behind their arguments. The best way to think about this is to imagine these technical indicators as a jury of financial experts. Every single one of them is looking at the exact same evidence, the stock's price history, its trading volume, but each one has their own specialty, their own unique perspective. And right now, this jury is seriously divided. So let's hear the arguments from both sides. Okay, first up, the case for selling. We've got 3 jurors making a really strong argument here. First, the moving average, the MA, which is great at showing the general trend, is pointing down, not a good sign. Then you have Fibonacci, or Fib, which is all about finding these key turning points. It's basically saying the stock has hit a ceiling, a resistance level, and it's really struggling to break through. And finally, you've got momentum. This one measures the speed of the price change, and it's showing that the stock is losing steam. It's kind of like a ball you've thrown up in the air. It's slowing, right before it's about to fall. So it seems pretty straightforward, right? The arguments to sell are solid, they come from different angles, but in our little courtroom here, there is one powerful voice arguing against the entire crowd, and it's making a point that's just impossible to ignore. And that powerful voice is the on-balance volume, or OBV. Think of this indicator as the jury's detective. It doesn't just look at the price, it looks at trading volume to figure out where the smart money is really going. And a buy signal here? That suggests that even though the price might look a little weak, more money is actually flowing into the stock than out of it. It's a sign of real underlying strength. It hints that big investors might be quietly buying up shares. So, yeah, we have a major disagreement on our hands. Which brings us right back to the central question. The jury is leaning 3-to-1 in favor of selling. The arguments are solid, so why wasn't the final verdict a clear sell? Why the hesitation? Why the low confidence? Well, it turns out the answer isn't with the jurors who spoke up, it's with the ones who stayed quiet. And this brings us to the final act, weighing all the evidence. Because somewhere in a detail we've overlooked, we are about to find the one deciding factor that cracks this whole case wide open. The key to this entire mystery, it's the silent members of our jury. See, this analysis didn't just look at 4 indicators. The full report used a total of 9. So while 1 said buy and 3 said sell, that leaves 5 other jurors who looked at all the evidence and basically said, you know what? I'm not sure. They abstained. And here they are. This is a silent majority. You've got the RSI, MACD, Bollinger Bands, stochastics, and the ADX. Now look, you don't need to be an expert on what every single one of these does. Just know this. These are some of the most respected, widely used indicators out there. And the fact that all 5 of them are coming back inconclusive, that is the single most important clue in this entire mystery.
And when you see it visually like this, it all just clicks, doesn't it? The neutral camp is the biggest group by far, with 5 signals. It's bigger than the 3 sell and the 1 little buy signal combined. The jury isn't split 3 to 1, it's split 3 to 1 to 5. There is no consensus at all. What we have is just widespread uncertainty.
So here's the big takeaway. In technical analysis, a lack of a clear signal is a signal. It's a signal of indecision in the market. When the majority of your experts are shrugging their shoulders, you don't just side with the loudest minority. The only logical, prudent thing to do is to fall back to a position of caution. And on Wall Street, caution means hold. Just wait and see. And that low confidence, it makes perfect sense now. It's just an honest reflection of how divided the evidence really is. So after all that, what's the big lesson here? Well, solving this little puzzle actually teaches us something really important about how to look at data, not just in finance, but, well, pretty much everywhere. What this whole case really shows us is what good analysis is all about. It's not about finding some magic bullet that predicts the future. It's a process. First, you gather information from a whole bunch of different sources, like our 9 indicators. Second, you look for where they agree, but more importantly, where they disagree. Third, you have to weigh that balance of evidence. And finally, you form a conclusion that's always about probability, not certainty. And honestly, this is the most important lesson of all. Good data analysis, whether it's for stocks or for science, is not a crystal ball, it's not fortune-telling. Its real power is giving you a clear-eyed, objective look at the situation as it is right now. It helps you understand the balance of probabilities. And in our case, the probability of a big move up or down was pretty low because the evidence was a total mess. The most likely outcome was just more indecision, which made hold the smartest call.
So, I'll leave you with this final thought to chew on. We started with this really confusing report that was full of contradictions, but by digging in, we found that the confusion was the message. The data was a perfect mirror of an uncertain market. It really makes you wonder, doesn't it? In any situation, when the data tells conflicting stories, maybe that conflict isn't a flaw. Maybe that conflict is the most accurate picture of the truth we're ever going to get. Thanks for joining me on this one.